Hello traders, welcome to your daily market update for Friday the 8th of May 2015. And overnight we've seen the US dollar trade higher as jobless claims came in the lowest level in 5 years. So we also seen the yield dip a little bit and the market turn as a little bit of a result. So there was a little bit of optimism as the market starts to be a little bit more positive, but ultimately torn as to what the non-farm payrolls are going to be. The non-farm payrolls could be any number of cases, and we are moving more to a 50-50 chance as to whether it's going to be good or bad. However, there is the opportunity for it to be flat as well. So it will be a big event risk, and the expectation of the unemployment is to drop. And we will see, if you want to scroll down here, you will see that we are expected to move down to 5.4%, and the average hourly earnings is also expected to remain flat. There are some economists that expect an uptick as well. So with the average output of the data we've seen this month, it does indicate to a very torn result, and that will lead to quite some volatility, so beware of that. We also seen last night the Great British Pound after the UK election had a rally. That rally was on the back of the hung parliament fears being alleviated, as it seems that the Conservative Party will win, and all the polls leading up to the election were actually far from being accurate to the true values. So as a result, we did get a relief rally, and that support should continue to remain within the market with the pound for now. And we will see as the numbers get firmed up exactly how far the positive nature can stretch. The Canadian dollar fell overnight on the back of oil falling back below $60 a barrel. We do have Canadian employment report expected tonight, and there is expected to be a worse result from the Canadian, with unemployment expecting to rise to 6.9%, and we are expected to see more people losing jobs. So we'll keep an eye on that. Moving into the European session, we do have trade balance out for the pound, but I think that the excitement over the election will reign supreme. So we'll keep an eye on that throughout the European session. The Australian dollar, we've seen that yesterday with the employment data coming in weaker, but the market bounced on the notion that it wasn't too bad considering the previous month's surprise to the upside, and generally that will follow with a downside the month following. And we got more of a flat result. However, that did fade away, and we didn't stay above 80 cents for too long. And the RBA minutes out this morning, basically the Australian dollar fell on the back of the RBA, telling everybody that the door is still open for further cuts. So we should see the Australian dollar remain under pressure. Having a look at the dollar index, you can see here, I'll move to a daily chart for you. We did get a bounce off the support level. We still have some headwinds in front of us, with 96 being resistance level, 94 being support, and the non-farm payroll tonight will tell whether we're going to get a breakout of either side of that. And with the volatility that is expected, I'm sure that we will get a breakout, no doubt. So keep an eye on that and keep your trading safe. So let's move to the charts, and we'll have a look at the daily chart. You can see here the New Zealand is still remaining under pressure, and it has fallen as we had a breakout of this trend line, or as I have been referring to it, as a rising wedge. And the breakout to the downside does look like momentum is going to carry it lower. However, wait and see what happens tonight with the US dollar and the non-farm payrolls, as that will determine whether we see a bounce or whether the falls will continue. The Australian dollar has had its falls, and we do have major support here at 77.7. So I think that we will see either a break of this, or the Australian dollar may find support off this trend line based on the non-farm payrolls. Keep an eye on those key levels, as that will dictate the direction. The Great British Pound has had a bounce, as you can see, and it's coming up and testing on the weekly chart, and the daily chart is also showing quite large price action coming up and testing historical highs, and for now it has stalled from there, and we'll see what happens with trade balance and the further information coming out about the election. And we do have support at a long way down here at $1.50.9. The euro has come off the highs. We did see the bond market being quite volatile overnight, and that can be clearly reflected in superopposing charts, and I will drag some across here. And you'll see here we have the bond price, and then we have the euro versus the Australian versus the US dollar, and they are a mirror image of one another. And you can see here by the falls that we've had, and then the massive correction that we've seen yesterday. So that has caused the euro to pull back as well. So the euro will be trading once again subject to the US dollar tonight, I feel, and the bond market volatility. We'll see if that comes back into play, and if we do see further bounces, it should push the euro versus the US lower. The US versus the Canadian dollar has seen a bounce, and it is a bounce off the key 121 level, pardon me. And you can see here on the daily that we have formed a double bottom at the fib 61.8, and it looks like for now that the price does want to go higher. That will be subject to oil continuing to fall and a positive non-farm payroll result tonight. And if that's the case, you can see that we're potentially forming on the weekly chart tweezer bottoms, which holds very strong support for the long-term view. We'll see how it pans out after the non-farm payroll. We're still seeing a range-bound market here for the US versus the Japanese yen, and I think that's going to continue. Resistance at $120.7 yen, and support at 118. A breakout of that is going to be subject to a massive result in the non-farm payroll, and I'm not sure whether we'll get that or not. I'm pretty sure there'll be better trading opportunities elsewhere. All right, that's it from me today. Trade well. Have a great weekend. I'll be back again next week. And hopefully the non-farm payroll delivers what you're all looking for. Until tomorrow, trade well.